Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of December the 31st, 2018. Now, as we move into the calendar year 2019, some interesting moves likely to happen here. The dollar under significant pressure against certain currency pairs, not all. We've got a bear market forming on the equities, gold very strong, and oil again very weak. So let's get started and have a look at some of the key levels that we need to watch. Now, with the dollar index, 96.31 is very strong, currently very strong resistance. We should expect potentially some dollar strength at the beginning of the month. Now, at the beginning of the month, when we come back in at 2019, we're going to have the non-farm payroll number. So that is going to be an interesting number because the Fed will be watching it. Now, the Fed again is stated that they're very mixed signal from the Fed. Some people interpret it as bullish, some people, or excuse me, hawkish versus dovish. In my opinion, respectful opinion, it was rather hawkish, but again, I don't think the Fed is going to be raising rates too many times, if at all, in 2019. The dollar already starting to feel the pressure of that. Now, looking at all the main indicators, we are building momentum, but we've still got very strong verified resistance at the same level I talked about weeks ago, which is 97.50. We're not breaking through that level. The downside support here for the dollar to really start to turn significantly bearish, we'd be looking for a break below 94.20. Now, once again, we are going to get close to that area, likely at the very beginning of the month. That should give equities a slight boost here. Now, a lot of very heated debate on this topic of the S&P 500 and stocks in general. In my respectful opinion, stocks started to turn very, very bearish right at this particular level on December the 3rd. Now, the reason I'm saying that, again, I've discussed this in the live training room. We have a triple top forming based around these verified resistance zones. And again, the idea with this particular outlook is not to tell you what's already happened, but to forecast what's going to happen. That's the key thing, at least with my particular outlook. So when I'm looking at these things, we've got a little bit of a base form. But when we're going into 2019 here, guys, the key critical level that we want to be watching is this triple top up here, and that's coming in at or about the 28.20, 28.17 area. So any move towards that particular area is simply corrective in nature. I'm not going to argue a long-term point here other than to say that VantagePoint accurately forecasted the S&P 500 going lower on October the 8th. We've had multiple retracements, but these retracements have, again, they have now formed a triple top off of these verified resistance zone. That is not me saying it, guys. That is the market saying it. And again, I am not one that's going to argue with market sentiment, okay? So right now, the stocks probably could see a little bit of an extension higher. But as we look at the long predicted from VantagePoint, this level we want to watch very closely, 24.79. If we can continue to hold above this particular level, closing at 24.86 on Friday, then stock should correct higher back up towards this 26.87 and maybe ultimately back towards 28.17. But in my respectful opinion, it's very unlikely we are going to get above 28.17 without some assistance from the Fed. Now, when we look at oil, to VantagePoint's credit, and I'll be the first one to admit it, that I've got it wrong here. I was fighting VantagePoint. In my respectful opinion only, I felt that oil was going to hold just around this yearly opening price, but it didn't. The forecast was continued weakness on oil contracts, and that's exactly what happened. So it's a very, very good call from VantagePoint. However, if stocks can move higher, oil should follow. We can see that we've got the medium term crossing the long predicted difference. The MACD is very conflicted, but the RSI is telling us we have very, very little momentum to the upside, at least currently in oil. And again, we don't want to get into, debating things up and down, inside and out, especially, at the end of the year. we just want to watch price action and be very cognitive of what's happening with it. Now, with Euro US, we are still within the overall primary range here, guys. There is no trending move here. There actually hasn't been a trending move in the euro again, in my respectful opinion, since back here in early November, late October. So once again, we're approaching that exact same level. The difference being this time, guys, is that, in my respectful opinion, the game changer on this one potentially is our gold contracts. Gold, I've been forecasting gold higher for what seems like an eternity. It's finally making its move. That should prompt buyers to move into the euro, not out of the euro, to be very clear. And this is where I think people tend to get a little confused. If gold is going up, the US dollar is going down, and usually the euro is following it. So right now, our key VantagePoint levels are coming in at 113.76. That's a major support level right now. And we've got a strong verified support zone that's also coming in at 113.43. So that would be our buy area. Now, again, if we look at our long predicted from VantagePoint using the blue line only, 114.03. So basically, we have pretty strong support between 113.43 and 113.43, excuse me, and 114.03. So we would still look to buy on dips. That's the way we would continue to play this on dollar weakness against certain pairs. Now, its counterpart, which is of course US Swiss franc, very, very good call on VantagePoint here. The initial sell-off starting way back in November the 16th, we've had multiple retracements higher, as you can see, and each time that has been a fantastic selling opportunity. With my own direct clients, I have had nothing but shorts out for what it seems like months. As soon as we put a top in here on the US Swiss franc, that came in around 101.28. Shorts have been very, very good. Now, we could see the pressure come off the downside if stocks rally. If stocks rally, dollar yen will go higher, US Swiss franc will go higher, but the dollar still remains structurally weak against the Swiss franc, the euro, and of course the Japanese yen. So our primary indicators here are saying further downside, but I would have liked to have seen a close below this particular level here, down around 90. I would have liked to have seen a close below 98.40. We didn't get it, so if stocks bounce higher, US Swiss franc will likely follow. Now, as we look at the British pound going into 2019, we've got a very, I would say, a moderate to weak buy signal here. We've closed above that critical T-cross long at 126.67. That represents a strong support level. Our MACD is pointing higher. Our RSI is saying momentum is building to the upside on dollar weakness. So for now, guys, we look to buy. We use our long predicted here. We've closed above that 126.53. Very, very good support at this level. But this lower verified support zone at 126.07, I would be more inclined to let it come down into that area before I think about buying it. But the British pound will always be a wild card as long as Brexit is in play here. So try and remember that this pair, very, very difficult to forecast and very choppy. Now, with dollar yen, once again, another fantastic sell signal from VantagePoint. We were actually doing this one in the VantagePoint live training room also, actually right around 113.20, I believe we were selling it at. We let it break down below there. We had a retracement back up to our T-cross long, and down we go. Now, the only problem that I'm seeing here going into 2019 is we have support building. This verified zone here, that's coming in right around the 110.20 area. So we're going to see if this area, holds or not, but it will be determined by stocks. If stocks and the S&P 500 more specifically, and the Dow and the Nikkei go higher, then dollar yen will go higher also. Even if the US dollar is weak across the board, it will make gains against the Japanese yen. So try and remember that. Right now, the indicators are still saying a little bit more downside, so watch for a potential reversal corrective move higher next week. Now, if we do correct higher, 112 should cap the top side. Now, as we come into our three main commodity currencies, I'm going to start with USCAD. Once again, you know, the US dollar has made significant gains against the Canadian dollar, but this is largely based on falling oil prices, a weaker economy in Canada, and just general lack of investment in Canada overall. So right now, once again, you can see our medium-term predicted difference is trying to break away from the long, but the primary indicators are absolutely overbought here. That doesn't mean it can't go higher. We're coming into some significant verified zones up here, so I'll draw everybody's attention to that. The upside target here potentially still could be 137.50, guys. If those stocks sell off, oil moves lower, this absolutely can go higher, even though we're overbought. But ultimately what we're looking for is a top to be put in place. We know where the bottom is, guys. It's down at the former breakout level, which is about 133.50, 133.80. So we know where the bottom part of this zone is. We're just looking for a top to be put in place. Once we get a top put in place, then we can think about shorts. But here's what we need. We need oil moving higher and stocks moving higher. If those two things happen, USCAD should move lower. Now, the exact same thing here, guys, goes for Aussie US and New Zealand US. Now, I talked about last week, even with my own direct clients, we've been cautiously buying this pair, but the key word there is caution. We've got our neural index turning green, the RSI heavily oversold territory starting to correct to the upside. It doesn't mean the pressure's off the downside, guys. It means that this pair, the Aussie currency across the board, the Aussie against the New Zealand, the Aussie against the US dollar, the Aussie against the Swiss franc and the euro, it's oversold across the board. So a corrective move higher in the Aussie currency in general across the board cannot be ruled out. And the same thing would apply to New Zealand. We look at New Zealand, it's nowhere near as oversold as what the Aussie is, but it's still oversold. And we've got support forming here, guys. But again, the Aussie and the New Zealand are very sensitive to moves in the global stock markets, a risk on, risk off scenario. So if we're going to buy the Aussie, the New Zealand, or the CAD, we're looking for stocks to move higher. Very, very critical what I'm saying there. So at this time, I want to wish everybody a very happy new year. And again, this is the Forex Weekly Outlook for the week of December the 31st, 2018.